Hi guys, welcome to my YouTube channel. Today we are going to look at the forest forecast, the forest outlook for the week from 4th of July to 8th of July. And then don't forget there is NFP on 8th of July that can change the direction of the market. So first thing we are going to look at is let's look at the fundamental analysis for the week, the fundamental outlook, the news. And US dollar, I think America has a bank holiday on Monday, so USPS might not move. It might be in a ranging form. And then on Monday too, we have franc Swiss. What's it called? franc Swiss CPI. That's the CPI on Monday. So it's an high impact news. As you see, it's indicated with red uh, indicator. So on Tuesday, we have Australian dollar interest rate. So this Australian dollar interest rate, we have to wait for the report of interest rate before we enter our Australian dollar position. And their position, there I've already did analysis on Australian dollar. But my own bias, the old bias that I have for Australian dollar is to the downside. So any spike up will give us a um a chance to look for bearish setup, and then there are some levels at which it will break out. You know that okay, this bearish setup is no more valid. Okay, the market has changed bias, but before then our bias still remain bearish. So on Thursday, so we have the ADP farm employment change on USD. So on Wednesday too, I think we have something on Wednesday. On Wednesday we have FOMC meeting. Yeah, USD FOMC meeting. So please be careful of this one too on Wednesday. So on Thursday we have ADP farm employment change, and then on Thursday too we have IVPMI. So all these ones can have a positive or negative impact in the market. So on Friday, this is the due day. We have the card employment change and the unemployment rate, and then we have the non-farm payroll, so NFP, so non-farm employment change. So the unemployment rate will be on Friday. So this report can shape the market, can change the market direction, and it can also make the market continue in the direction it was before. So let's now check the technical analysis for the week. So I haven't done this before. So last week we talked about this level that okay, if this level break, we'll see a break to the downside, then we'll see another break to the downside. But for now, what we saw last week is the rejection at the resistant level, and I told you guys that you don't sell until you don't buy, sorry, you don't buy until you have a rejection at the we have a breakout at this resistance, and then a retest. So that's what I dropped last week about that. But last week we saw a rejection at that solid resistant level. So this is a solid resistance level. This is a very strong resistance level. So we saw a rejection at that place. But my whole bias is still bullish. Reason why my bias is still bullish because with the old pair we can still see that the old pair still remain bullish, and then USD for now is strong. So USD for now is strong. If you check the DSY, you know that let's check the DSY. If you check the DSY, you know that USD is strong for now. But for now, we can also see some rejection coming at this area. But if we see a breakout here, then we know that we'll still see a bullish DXY. That means that the US currency is strong. So let's go back to the USD JPY. So what we are looking at now is that we for this week we'll look at we'll check out the breakout of this level. If it break out this level, then we'll know that we'll go bullish. But if it breaks to the downside, if we see a break to the downside, then we should be aiming at this support level to go long. So that's my bias on USD JPY. So you have to wait for the break of the resistance or for the break of the support. So the support level at 134438, you have to, if it breaks, then you know that the next support level you will see should be at 133.7. So that's when you be looking to go long from that area. So that's that about USD JPY. So the next pair we want to check out is Euro AUD. Last week we talked about this strong resistance at this Euro AUD. So as you can see, we saw a rejection at this area. We saw a rejection, and I said last week, and I said something about if we did not see a rejection at this area in which we took the profit, we took 50 pips profit at that area in the premium group. So if we did not see the rejection that will go this way, we should likely see a rejection at this particular area. So what I'm not saying is that my own bias still remain bearish on Euro AUD. So my Euro AUD bias still remains bearish because we can see this very strong resistance level at this area. We can see that this resistance level is very strong, and if you check the 4 hour time frame, we should see some rejection at that area. As you can see, there's some rejection at this area, so we should be looking to short to this side, that is to sell to that particular side. And if you are on bullish bias, you have to wait for the break of this resistance level, then you wait for retest. Not likely that it's going to retest every time, but just wait for a rejection candle that will tell you that okay, this is ready to go long or to move. So right now, my bias still remains that it will might form a double top here, and you see a move to the downside. That's my bias on Euro AUD. So the another pair we want to check out is Euro JPY. So checking out of Euro JPY, we can see that we are still in a bullish bias. Our bias still remain bullish on Euro JPY, and one of the reason is that if we check the if we do if you draw our trend line here, we can still see that we can still see a rejection at the trend line. There's still some rejection at the trend line, which make it there's still some rejection at the trend line, which tells us that we are still in a bullish run, because when the price this hit this trend line, it reject, and we can see a 4 hour rejection candle there. As you can see, we can see that we have a 4 hour rejection candle at this support, by which the trend line serves as the support. So next week we ought to see a bullish move on Euro JPY. So there's two scenarios we can see here. We can see the move to this resistance level, and we can see a break to the downside, or we'll see a move to the resistance level, then we'll see a breakout to the upside. So that's what I'm looking at on Euro JPY. So if your own bias is bearish, so you can wait for this for the breakout of this support level, because we have a very strong support here. You can wait for the breakout, retest, then you sell. So that's that about Euro JPY. So the next pair we want to check is I don't think we are checking Euro SND. So the next pair we are checking is DBP USD. So last week we said the bias on DBP USD is bearish, and then we see that it sell last week. We saw a breakout and a sell. Right now, my own bias still remain the old bias still remain bearish on the DBP USD. So what we are going to look out before we enter is we might see a retracement to this level, because this level still serve as a resistance level, and we can see some supply level at this area. So we can see a retracement to this level before we see the down movement. But if you are on a bearish bias, please, you have to wait for the break of this level. You have to wait for the break of this level. If you are on bullish bias, sorry, you have to wait for the break of that level before you can change your bias, because any retracement is an opportunity for you to go short or to sell on GBP USD. Any retracement is an opportunity for you to what, to sell. If it's retrace here and we see a rejection at this place, we'll still what, we'll still sell. But if we have a breakout at this level, then we can say that okay, our bias has changed. So the next pair we are looking at is GBP JPY. So GBP JPY to like Euro JPY, my bias still remain bullish after the bearish pressure last week. By the end of last week, we saw a bearish pressure on GBP JPY, Euro JPY, and some other JPY pairs. But my bias still remain bullish until we break this level of support. Until we break this level of support, my bias still remain bullish. And then hoping to break this level, of resistance, and then we can see the move to the 174 to 30. But this level is a strong resistance, so we can see a move to the resistance, then we can see a break to the downside. But if you are bearish bias, just make sure we have a break of this support level. So the next pair I'm checking out is okay, I've checked out Euro AUD. So the next pair I want to check out is Canadian dollar. So last week, Swiss franc. Last week, we did this analysis and we said that okay, we might see a retracement to the upside before we see a massive fall. So if we check the monthly time frame, zoom 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 zoom. So if you check the monthly time frame, we can see that okay, let me remove them. We can see that this is a retracement. um if we use our Fibonacci retracement, we can see a rejection at 38.2 level, or 50%. But my bias remain bearish at this area. We might see a rejection at 23.6, 38.2, or 50% level. So if we go to the weekly time frame, we can see a rejection at this area, which tells us that this area hold as a support. So we might see from here, we might see a move to this side. We might see a move to this side before we see a move to the downside. We understand that. So here we still are going to fold our arms and see where it will reject at this area. So the next pair we are going to look at, I think, is SND card and then card JPY. SND card and card JPY. So my bias on SND card still remain bearish. My bias remain bearish on SND card, because we can see a head and shoulder at this place. We see a head and shoulder, and we see the break of this neckline. We see the break of this neckline, and we see a retest. So this should tell us that we should see a move to the downside. This tells us that we should see a move to the downside. So we see a break of the neckline, and we see a retest. So this tells us that any rejection from here, we should sell to this level. Any rejection from here, we sell to this level until we have a break above this level. So that's when the trade will be invalidated. So the last pair we are going to check is card JPY. That's Canadian dollar, Japanese yen. Where is card JPY? So so the last pair we are going to check is this. So this, my bias still remain bullish on this. So if we go to 1 hour time frame, we can see that we are already it's already want to break this trend line, and if it break it to test, we are going to, this is one of my best bets for this week, Canadian dollar, Japanese yen. So this, I can say this categorically, this is my best bet for this week, because we see a rejection, a multiple rejection from the trend line. Even last week when we saw a a bearish pressure on CAD-JPY, we still see a rejection at this trend line. This trend, as you can see. So this tells us that this is the third rejection. This tells us that likely we might go long at this particular area. As you all know, market might change bias, market might change direction. Market is all about probability. So this is just my own analysis due to what I can see at the market right now. You can do your own analysis and see if it fits your entry. This is not a financial advice, but a financial education. So what I'm trying to say is that if you are if you are in a bearish bias on CAD JPY, so you should wait for the breakout of this trend line. That is if you are in a bearish bias. Just wait for the breakout of the trend line, then break to the downside. She understand. So then if your bias is neutral for now, we know that the whole direction is what is to the upside, unless proven otherwise. And I think this one give us a very good risk to reward ratio to battle with. Next, I think the stop loss is not more than 40 pips, and the take profit is something like 80 to 90 pips. So good luck, guys. Don't forget to like, share, and then subscribe to my YouTube channel for more content like this.